Oh, hi everyone, it's Susie again. Hope you're all well. I just did one before, so live your life according to what you want to do. Life's short. Be kind to yourself, be kind to others, be kind to your parents, your family, because life is short and we just don't know when we're going to be around. So don't do things you regret. Anyway, very quickly, well, I try to be quick, but it's pretty hopeless because I would have so much to say. Seriously, still half asleep this morning. I can't seem to wake up. Well, it's not really morning, it's sort of the afternoon. I've titled this one The Big Quiet Before the INSTO Tidal Wave, and I actually believe that INSTO money is coming, and the reason why I believe that is regulation will come by the SEC, the Security Exchange Commission of the US, and other government authorities, and I believe regulation is inevitable. There's no doubt about it. Also, the International Monetary Fund said the same thing. Crypto regulation is inevitable too. It just can't be avoided. You can't have, investors investing in crypto when there's no regulation, and creators of coins can say what they like, and there's so many scams and people lose so much money, as you saw last year with the YouTube I did, that nearly 50% of cryptos were scams and people lost their money, individual investors, which is a pretty bad thing. So governments will come in, it's inevitable, they will regulate, and just to protect the investor, and that's all there is to it. Goldman Sachs this week, via their ownership of 15% of Circle, purchased Polynex, and I think that's a really interesting move. Basically, it shows you that instos are definitely interested in this crypto market. And with that, now Polynex is told to basically follow compliance in terms of exactly what you have to do with equity securities and opening up equity accounts and bond accounts. Know your own client. Also know the source of the client income. Now, if you don't do that, if you don't know that, the client can't open up an account at all. And this will be the same for the crypto market. So the US has a Patriot Cash Act, where you have to know the source of the income, obviously to avoid whether it's coming from terrorists or drug dealing money. And if you don't, you can't actually open up an account. So Polynex is being told that every new account they open, they have to know the client, know exactly the details of the client, the individual ID, the whole thing, and know the source of their income. They've got to provide, obviously, rate statements, ownership statements, passport, ID, the lot. I mean, basically the crypto markets are moving into the traditional markets where you have to provide all the identification, and also you have to provide where the source of your income's coming from, whether it's from work, whether you inherited, whether you didn't. And that being the case, you basically won't be able to open up a crypto account, particularly in the US, for example, because the regulation is pretty staunch, is pretty strong, and it'll continue to go that way, and that's pretty much how it is going. Big corporates are definitely interested in this market as well. There's rumours that some of the big corporates have been mining for income, and Fidelity, which is a big US asset manager, invests millions in bond markets, equity markets and like, has been mining crypto for 3 years and has found that it's a very profitable business. They wanted to do that to learn exactly the technology and how the technology works, and they've found it to be a very, very profitable business. And it wouldn't surprise me either if they started running cryptocurrency fund accounts or investment accounts. JP Morgan has done a complete backflip and basically is now talking to clients and offering clients Bitcoin and all other crypto old assets. Fidelity, as I said, is a huge fund manager making lots of money. Coinbase, I think, is really interesting. Is setting up a custodian account, and now this is really, really important for institutions. They all need a custody account, which is run separate to the investment manager, the investment of the funds. The custodian basically looks after the assets and distributes income to the beneficiaries of that fund. So the custodian is a representative, regulatory entity, and has their own rules and regulations in terms of protocol, in terms of compliance. And institutions will and often do use custodians for securities. So that's going to be huge if they get their custodian license, because as you know, Coinbase is one of two excuse me, of the only exchanges in the US that are regulated and that have a license. And it's pretty serious and detailed now to open up an account with those guys. Again, they're complying with the Know Your Client regulation, the Patriot Act, knowing where the funds come from. And it wouldn't surprise me either if Coinbase get a credit rating, because often institutions do require the custodian to have a credit rating, because they're actually the custodians holding the funds on behalf of the institution. So the institution will actually have, you know, the institution's actually got their investment fund sitting with, say, Coinbase, for example. So if Coinbase has a credit rating, it's a much better story, because Coinbase have a liability to that institution. So it's pretty important. Also, BlackRock, who own basically have a $5.2 trillion fund management investment portfolios, basically said crypto will move to be more widespread as well. So a lot is going on. There's no doubt about it. As I said, regulation is coming. The IRS, the Internal Revenue Service of the US, the tax system over there, they've asked again for Coinbase to disclose another 13,000 clients between the period of, I think it was 2015 to 2016 for tax and other reasons. Now, if you remember, about 6 months ago, they also asked them to disclose 150,000. So the SEC and the IRS have a lot of power. Basically, they have a huge amount of power. The SEC is closing down, and they just recently closed down some scams, and the one particularly out of Texas was a Rise Bank, 600 million. They basically closed that down. So they are becoming much more active on the regulatory side and the admin side. And with compliance and government rules, the issuers of the coins, the creators of those coins and the ICOs and the tokens will be more accountable. Basically, they'll be more accountable to the SEC and government rules. And if there is any fraud or anything where information is said incorrectly, or they've said something that's not right, they could go to jail like in any other market. You know, in the equity market, the bond market, the foreign exchange market, if you say something incorrect to the investor and it's not correct and it's fraud or something that's a lie, you can basically go to jail. It's an absolute fact. Now, the cryptocurrency market will be no different to any other market, and that's pretty much where this market is heading. So basically, you'll see that creators of coins will have to provide how their technology works with written proper documentation, because cryptocurrencies, you know, is a decentralized and it's open source technology. Everyone should have access to the documentation, the written documentation to how that cryptocurrency works in terms of the open source ledger. You should be able to go into GitHub and see their documentation to how exactly their cryptocurrency works. Now, I want to make highlight something really important here. IOTA at the moment is in a lot of argy-bargy with a cryptocurrency expert who basically has been checking their cryptocurrency to see if it works, their Tangle cryptocurrency. And again, this guy, his name is Ethan Haleman, has basically said there are serious problems with the cryptocurrency of IOTA. This is another negative to IOTA. Now, this guy knows what he's talking about again. He has asked IOTA for their documentation to how their cryptocurrency works, because in open source, everyone should be able to get access to the documentation for how a cryptocurrency works if you've got nothing to hide. And IOTA basically said they can't provide it, which is pretty bad, I've got to say, because the reality is if this market becomes regulated, which it will, Coinbase, SEC, the other regulatory authorities will want to see how this cryptocurrency is working, and will want to see the documentation and the protocol to this cryptocurrency. Now, if it's not working, and they've got money from the end investor, which they have, the end investor holds IOTA coins, and if the SEC can prove that this is not working, the creators of IOTA will basically go to jail. It's an absolute fact, because you cannot lie to the end investor at the end of the day. You know, in any other market, you cannot do it, right? In the equity market, the fixed income market, the money market, you name it. And the cryptocurrency market will be the same as any other market when it is regulated, and it is heading that way with regulation. So please look at this this reference here. There is so many letters, about 100 different letters, which have been going on for the last 2 months. Look at this here, this reference here. And this is quite serious because IOTA can't get out of this. They can't keep putting off this guy because Ethan Hillman is a cryptocurrency expert. And what they've found is, he said, we've found serious crypto weaknesses in the cryptographic hash function curl used by IOTA curl. These weaknesses threaten the security of the signatures in the POW, in IOTA, as POW signatures rely on curl to be pseudo-random and collision resistant. So what they're saying in very basic speak is there is a problem with the multi-signatures of IOTA, which are opening up the account, opening up the system itself, and the technology is open to scammers and people that can steal coins quite easily, and that also the technology is not working for the end investor where they can do transactions. So Ethan has basically come up and said, you've actually changed the cryptography to your own model, and you don't do that. You use what works, which is SHA-256. The IOTA guys have changed to something else, and they've actually found that it doesn't work. And like Ethan Hallman has said, you don't change, cryptographic technology when it works to something else that doesn't work. That's what amateurs do. And so, of course, the IOTA guys are now jumping up and down trying to say, that it works when it actually doesn't. And Ethan has, again said, please provide me with your documentation to how this works, because we can actually set this up and basically find out whether it works. And IOTA have come back and said they cannot provide the documentation, which is crap. Because in any other open source ledger, you should be able to provide the documentation to the technology. That's an absolute fact. So now IOTA, which is typical of IOTA, they have their fan club and their groupies, saying it's all wrong, which is not. All they've asked is to provide the documentation to prove the IOTA system works. So you say the system can do this. Okay, let's prove that it can do that, and then we'll go away. So they've asked for the paperwork because the system doesn't work according to what IOTA is saying. And with the paperwork, you can basically set up your own system to see it's working. Now, the reality is IOTA is not working. So they've asked for the documentation. And so now it's gone to IOTA going, we're going to sue you guys because you're not saying the right thing. And Ethan and that are saying, look, we just want the documentation, right? So that we can see, we can set this up and see if it's working, because according to the system we're running, what we're checking with you, we're doing the technology, we're running transactions through your system, and they're not hitting our wallets. We're losing our money like every other investor. So what it's come down to now is Charles Hoskin has said, if the idiots at IOTA try to sue this guy for asking for normal information, and the reality is the SEC and everyone else will be asking for this information, the IOTA guys have gone, we're going to sue this guy. Well, Charles Hoskin said, if that happens, this will go to court, and Charles Hoskin will pay for Ethan Hallman's for his legal costs. And all he's asking for is disclose the information, disclose the written technical paper for this curl process, which anyone can ask for. Now, what will happen is the SEC will subpoena the IOTA guys, and even though they're German or whatever they are, they'll subpoena that information. They'll get crypto technology experts in to see if the system's working, and if it isn't, these guys will be up for security fraud. It's an absolute certainty. So they better provide the stuff, because seriously, they'll be in a lot of trouble. I mean, if the system works like they say it does, they've got nothing to worry about. But honestly, these guys just jump up and down too much. They're required to produce the protocol, the working paper to the system, so that people can copy it. But, the thing is, they're not providing it, and also the system's not working. If you use IOTA, you'll find if you use it many, many times like I have, it doesn't work. Okay, let's go to the next one. That's enough of them, because I'm sick of them, and I'm sick of the idiots that follow them. With regulation, Again, as I've said, any serious flaws in technology will need to be disclosed to the investor, just like another financial market. So the investor knows everything about the investment before they put their money down. Another one that people are concerned over, and I've seen some real negative on, is neotechnology. Now, I did a paper on neotechnology, and it looked like they only had 6 to 9 nodes, which is really bad because it means that nothing gets processed through the system. If you have a look at this report, this one here, it's got serious issues with Neo, and it says Neo is a multi-billion-dollar disaster. Now, I did a paper on Neo in January, and I believe that because honestly, where the currency is, cryptocurrency, it's not worth that. Neo basically has been down forever and a day. People that are on the platform have got massive issues with it. Transactions aren't being processed. Nothing's happening. The system's down, down, down. Now, you don't pay $130 for a coin if the system's down, it's not working. So again, those guys were going to have to be, they're going to have to disclose why the system is not working, and people that are on the platform are just, pulling their hair out pretty much. Again, and they could be up for fraud as well, securities fraud. I mean, this market, this crypto market needs regulation, because without it, investors will just get done. They'll get scammed by these creators of these coins and these ICO people that are just trying to take money from you. So it needs regulation, and I want regulation, because otherwise you're just going to lose your money with these scammers, seriously. So I've said all that. Basically, anyone that comes out with, that's a creator of a coin or is behind a coin, they should be a responsible entity of that coin. And have the same compliance rules, the same regulatory environment that the other issuing markets have, like the bond market, the equity market, the money market, and the foreign exchange market. White papers should be, what's in white papers should have the correct information. They should be audited by an auditor, by a chartered accounting firm, whatever, and they should be true and reasonable that go to the end investor, just like in any other market. In this market, when the regulation does come, which is inevitable, Ripple will flourish. Other cryptos that want to avoid regulation won't be able to flourish in this market at all. You just are not going to be able to avoid the regulation in this market. The SEC will bring in, templates for ICOs with business plans, projections, audited statistical figures. If they can't do that, they'll just close the ICO down. That's a fact. And that's what they do in every other market. Okay, so what else are we up to here? Here we go. And also INSTOs that, just some information, INSTOs that set up funds, last year was 206, and in 2016 it was 39, 2014 it was 14. Now this year already there's been 226 crypto funds that have been set up, and fund sizes, and we're talking about the wholesale market here, the professional wholesale market, which is huge. Fund size can vary anything from 100 billion to trillions. Okay, so they're going to see money come into this market. It's going to be huge. Banks have come out, some of the banks, and said that crypto is a risk to their business. Bank of America came out and said that. JP Morgan Chase said that. BlackRock, oops, sorry, there's a typo there. BlackRock said they had 5.7 trillion in assets, and they said that cryptos will be used more. Also, Chinese investments of crypto are moving to Europe. You find that Estonia and Lithuania are very pro-crypto. So it's just a matter of time before the INSTOs get into this market in a big way with regulation. I think that's pretty much what they're waiting for. With regulation, what it means for cryptos is, this is my belief, and you guys can believe it or not. It's up to you. I don't particularly care whether you do or not. This is what I believe. With this, privacy coins, I think will be dead in the water, basically. So your Dashes and your Monaros and that will be dead in the water, because they just don't go with regulatory environment. Coins that comply with the regulation will do well. Coins that have any suspicion attached to them in terms of whether their technology works or not will be brought into account. And if their technology doesn't work like they say it does, they will be either sued or put in jail, the creators or the issuers of those coins. New ICOs will be made to fill out templates of a minimum of information which have to be approved by the SEC, just like any other market. And again, they won't be able to say fraudulent or absolute bullshit in their ICO papers. And overall, there'll be much more security for the end investor when they're investing in these crypto ICOs. Like, as I said last year, 46% of them were scams. And, so it should be. Creators and issuers of these tokens should be jailed for fraud or deceit. Absolutely, because people lose money. Real people, mums and dads, lose money. It's not right. Not right at all. So let's go to the next slide here. And what are we talking about? And again, this, Coinbase going into trying to get a custodian account is huge. I don't think people realise that. But the INSTO guys always need a custodian account. And basically, they'll look for a custodian account. It's where the custodian, looks after the administration side of the investments, of the, of the assets that are invested. The investor will have a fund that they invest. The investor, the fund manager will invest the money of the fund, and they'll do all the asset allocation in terms of the fund, the money in buying Ripple over something else or Bitcoin or whatever. But the custodian will do all the administration and pay out any distributions to the beneficiaries. And often institutions require the custodian to be rated because the institution has entrusted their investment funds to the custodian. So it's much more suitable if that custodian is rated, because the institution has literally given the access to the funds to the custodian, and the custodian will act like a responsible entity. Now, a responsible entity can be sued for misdoings and for wrongdoings, absolutely, in terms of white-collar crime. So the custodian will basically, as I said, administer the funds in terms of making sure, valid signatories are set up. If there's withdrawals of the funds, that the investment fund manager is operating according to their mandate. The mandate of the fund might say they can only invest, say, 60% of the fund in Ripple. The custodian will keep an eye out for that in terms of regulatory, in terms of administration of the fund. If they're in breach of that fund, the custodian will tell the owners of that of the funds that they are in breach of that fund, and the owners of those investment funds will need to know that. And if you make, as an investment manager, breaches, you go outside your mandate, you can get in a lot of trouble. And if you breach 3 times, you can actually be taken off as an investment fund manager of that fund, which is quite bad because you can actually lose the account. The role of the custodian: pays out distribution, reconciles cash flows, compliance, reports authorities, tax, the IRS, whatever it is, the government authorities, basically will look after the well-being of those assets. And often they will be rated, which is better for the INSTO as such. So what else we got here? Going to the next slide. Trying to speed this up. I always seem to go longer than I want to. Money that can potentially come into the market. Sorry, we've got a typo there again, which is always doing this. Into the crypto market. I've seen figures out there, total investable funds, and this is everything, of around 466 trillion. Anything from 250 trillion to 466 trillion, which is huge. The largest sovereign wealth fund in the world is the Norwegian Sovereign Wealth Fund, and considering they've only got a population of 3 million in Norway, they've got a $1 trillion sovereign wealth fund. Now, all that money that they have came from petrol receipts. So the Norwegian government was very smart and set up this fund years ago to invest in other financial assets, whether it be equity, whether it be credit, whether it be hybrids, whether it be bonds or whatever, and put petrol receipts in this fund and invest in other markets. And now this fund is a $1 trillion fund, which is massive. So going back to overall, so if we said investment funds of the world was 466 trillion, which is invested in equities, property, money market, fixed income, foreign exchange, credit, corporate credit, hybrids, you name it, other asset classes, property, whatever. If we said that only 1% of those investable funds was going to be invested in the crypto market, that brings it down to 4.6 trillion as of around the 28th of February. I mean, that is a huge amount of investable funds. So even if we said half of that is going to be invested in the crypto market, that would be 5 times the amount of money coming into the market in terms of market capitalization. if we said that 1% of 466 is 4.6 trillion, and the market capitalization of the crypto market currently is 465 billion, you're looking at 10 times the market capitalization of the crypto market, which is huge, which means there's so much money to come into this new market by the institutional guys, particularly if regulation comes in, custody accounts come in, all the exchanges are set up according to know your client, according to know the source of the income under the American Patriots Act, and they act like every other exchange, i.e. like the equity exchange or, the bond market or whatever, then potentially we're talking about huge amounts of money coming into this market, huge. Even as I said, 1%, even if these figures are lower, and we said 1% of, say, 2.5 trillion, we'd be looking at literally, $2.5 trillion coming to this market, which is massive. So, this is certainly going to push up, cryptocurrency, no doubt about it. It could push up the market 10 times if this money comes in, or even 5 times current capitalization. So, what else we got here? Just make sure I haven't missed any of these. So these figures are really, really big if the institutional guys come in, and I believe they will. I do believe they will. If these guys come into, and assuming they do come into this market, particularly the investment managers that manage funds, and say, they had 100 billion, for example. I've just put 100 there. In my mind, and not that I'm pro Ripple, but I am in some ways, because Ripple's technology is proven time and time again to work. They never have any downtime. There's never any issue. They can transact thousands of settlements, whether it be foreign currency or not, within 3 seconds. Never, ever had any downtime at all. So in my mind, the professionals, the instos, will hold of their portfolio 65% in Ripple. And the reason for that is because they will want to be able to make strategic investments, selling and buying with volume and with a lot of transaction. And they need a cryptocurrency that is always, the technology is always up, works, and is absolutely instant settlement. Every other crypto out there, there is a problem with them. For time, a time issue, like, Bitcoin or Ethereum, and, how many transactions they can process. Now, fund managers, investment fund managers will have hundreds and hundreds of different accounts under big, volume portfolios. And the thing is, they need instant settlement straight away, and they need transactions settled straight away. And they cannot afford to have the system down. Absolutely not. No way. So in my mind, they will use Ripple as the liquidity currency. Also, almost like the benchmark for their portfolios. And it doesn't surprise me, because we have seen hedge fund managers setting up with Ripple as the base cryptocurrency in their fund, because they know the technology works. You fudders can say whatever you like because you don't know anything. The professional market will look to Ripple. It is with no doubt in my mind. All the banks here in Australia are using Ripple. Over 100 banks are using them. MoneyGram, American Express, big companies are going to Ripple because the technology works, you idiots. It works. Try it, it works. Try anything else, IOTA, NEO, you'll find out. And I would say what they'll do is probably 10% in each of these, Bitcoin, Ethereum, and Litecoin. And then the rest will be altcoins, 5%. But the reality is they will hold most of their money in something that is absolutely instant settlement, where there is no risk of the settlement of the technology not working. Also, Ripple complies with the regulation, and it'll be a basic benchmark, and these percentages will be 5% plus or minus. I have no doubt in my mind about that. Also, with Ripple, there can be switches between other asset classes, whether it be bonds, FX, property, equities, you name it, or antiques or whatever. In other cryptocurrencies, that's not. You can't do that. and Ripple you can, and that's what institutional fund managers will be looking at. Anyway, look, this is food for thought. I do believe that INSTO money will come to this market this year, and it will be in volume, and ultimately it will move, this is my personal belief, it will move this market way up to figures we probably haven't seen yet. So, okay guys, look after yourself. You may disagree, whatever, it's fine, I don't care, but that's my view. Look after yourself guys, life is short, always be happy, and I'll talk to you soon. Thank you.